We were talking a little bit about this pre-show, about how Stretch is taking away the volatility. And you guys are doing something similar with the lending side. So let's break that down. How are they even doing it? What are the mechanics of it? And how are you guys bringing this over to the lending?
Yeah, I mean, let's start back with what Strategy's doing and with Stretch, right? I think it's a really interesting product. They are buying the Bitcoin. They have stated that they want to hold it for 10, 20, 30 years. And so the expected return on that is quite good. Most people don't have the appetite to hold it that long, or they have a demand for income. And so offering Stretch to provide capital to go buy the spot is really an interesting play. And so for somebody that wants a consistent return, well, I think they're paying 11.5% now, is really attractive to get exposure. And then Strategy gets to, if you think Bitcoin's going to grow 30% a year, they get to keep that other 20%. And so for structured products into the market, I think it's a really advantageous thing to help people diversify how they're thinking about managing their finance. Part of what they're doing is a structured fixed income product. And in the world of digital credit is really made up of two different things. One is the fixed income side, and the other side is liquidity. And that's what we're focused on doing, is really helping people have options of, if you choose to buy spot, you've worked hard to be able to buy that. You don't want to sell it, but you want to be able to tap into the value of it. And so that's what really providing liquidity is all about. And we're continuing to work on ways to take out the volatility with the ultimate goal of, we'd like to see Bitcoin-backed loans behave much more like a mortgage, where as long as you're making your monthly payments and it's a long-term relationship, then you don't have to worry about margin calls.
Yeah, that's very interesting because, I mean, we haven't really seen too much of this. They're calling it financial engineering in any products, of all time, right? So Stretch is really paying out, a significant amount. It seems like the percentage for Bitcoin-backed loans are starting to go down. It seems like everybody's describing it because of this pristine collateral that Bitcoin is. So where do you think the future is going with all of this industry, and as Bitcoin being able to unlock all these different financial products?
I think that the TradFi market, like the penny has dropped, that the quality of the collateral of Bitcoin is really differentiated in terms of its own liquidity and the ability of collecting it, right? So in traditional unsecured or even secured lending, with like cars and homes, if somebody defaults, you got to go get the house and then you have to sell it, or you have to go collect the car. And so being able to have an asset that can be sold instantly really changes and has strong price understanding, really changes the game. And so when we go out and we talk to lenders about get capital in, and they start to understand the ability of how the loans perform. Like, we've never had a loss on a loan in the history of Salt. We've been doing it for 10 years, and that's all because of the collateral. Like, when somebody gets to a 91% LTV, we swap it into stablecoin to protect the borrower, but also to protect our lenders so that we can pay the principal back. What we're seeing and expect is more capital to come in to drive the rates down, and we'll be able to offer more innovative products to customers about how they think about managing their own assets and ultimately building their wealth.
Yeah, and I think that's very interesting and parlays to the next question here, because you guys have been around for 10 years. So you've had, I'm sure, millions of different use cases now at this point. So what are some of the common things that you're seeing for people using Bitcoin-backed collateralized loans in order to what? Is it for expenses, houses? What are usually the type of things that you're seeing?
So there's three dominant use cases or classes of use cases. The first one is just for expenses. And we see people have worked hard to accumulate the Bitcoin. They want to sort of leverage it, get cash out of it in order to just pay for emergency expenses, to pay for a trip of a lifetime, just because they want to indulge and they want to reward themselves. So there's one category, it's all about expenses. Second category is all about income supplement. And it might be a sabbatical, it might be I want to reduce the amount I'm working and sort of have some additional income, or it might be full retirement. And we're seeing more and more of that for people to start to understand what that looks like, how they structure those loans. And then the third category is about investment. I want to borrow against my Bitcoin to create income, to create additional growth in terms of building wealth.
Yeah, that's good. That's very interesting. Sean and I actually had a panel on retiring on Bitcoin, so we kind of touched a little bit on that. But It's interesting that you're seeing that as a big use case. When it comes to retirement and looking at these Bitcoin-backed collateralized loans, how, are a lot of the, I guess, borrowers looking at it? Are they just saying, okay, I've got a bunch of Bitcoin and why borrow against it instead of selling it? What do you think is like, I guess, the better use case here?
Let's take a step back. For me, Bitcoin is democratizing wealth building, full stop, right? So the ultra wealthy, if you had $50 million and you had access to a private banker, you could start to borrow against your assets. And the rule of the ultra wealthy is pretty easy. Like, I'm going to buy appreciating assets. I'm never going to sell them. I'm going to borrow against them either to live my life or take advantage of other investment opportunities. Now, Bitcoin makes that available to everybody. You can start small, you can start to understand what that looks like, and then figure out your own strategy for what you want to invest in. Now, we see people borrowing against their Bitcoin as the foundational asset, and then going out and buying Stretch to get income with another asset. Or they're buying rental properties where they want to have the rental income as sort of, the income side of the stream, right? And they're getting smart. I talk to a lot of people, but I have a belief that, like, most people get trained about, hey, I'm going to generate income through my labor, right? I'm going to have labor-based income, and that's how I'm going to live my life. Now, that's a really hard way to live because you're just not getting any sort of leverage from assets. The shift that Bitcoin is helping people make, especially given that the average age or the age of first-time home buyers has increased so much, is shifting into asset-based income, where you accumulate a set of assets that gives you the opportunity to generate income. Now you have a lot more financial flexibility and ultimately financial freedom for how you want to live your life.
Yeah, so we were also talking pretty not only about what we're just breaking down right here, but about buying a home. And you brought up the rental properties aspect of everything. But how is you were on stage with CJK, he's building people's reserve, and it seems like Bitcoin's kind of almost swallowing up the real estate market, or at least making it more accessible. So not only the data from what you guys are seeing on the loan side, we're talking a little bit about the data from home buying side. So let's dive into that.
Yeah. So I think what CJ's doing is really interesting, right? You sort of have, you want to buy a $200,000 house, you put $200,000 of Bitcoin, he has attractive rates, and you go get your house, and it's a long-term relationship. What we have seen with Bitcoin-backed lending, doing this for 10 years, that there's 4 categories of use cases that have emerged. First one is just access. And we really think about the Bitcoin-backed loans as like a flexible layer of liquidity around real estate. So this first category of access is all about, I need enough money to make a down payment, and I'm going to borrow against it. Or I'm living in a country, so I moved from the US, I lived in the UK for over 10 years. When you move to a new country and you don't have a credit score, it's really hard to get a mortgage. If you have a way to borrow against it, then you get access to a property in a way you haven't had before. The second category that we see is what I would call advantage, that it's because you have Bitcoin and we can give you a loan in under 24 hours. If there's a house on the market that you really want, then you can use speed or be a cash buyer to your advantage to win properties. And now you may go back and refinance that, and you may do something else, but you've been able to get the property of your dreams because of the speed advantage or the liquidity advantage that you're giving to the sellers that people that are going through a traditional mortgage can't. The third category is agility. We've worked with people who have borrowed against their Bitcoin to buy a house, and then because their house hasn't sold yet, and then when their house sells, they pay off the loan and they're good and they sort of get a traditional mortgage. So there's flexibility. And then the last category is the amplification. And this is when somebody is borrowing against their Bitcoin to buy rental properties for income. But the other interesting model we've had customers do is they borrow against their Bitcoin, they buy a home, then can get a HELOC against the home, and they borrow the HELOC to pay off their loan to get a lower rate. So there's some really interesting elements that as people start to understand all the tools that are available to them because of Bitcoin, you can think more creatively and put up some really interesting strategies to work.
This is something that the wealthy do traditionally, correct?
All the time.
Yeah, so then now, does this just unlock another level for the traditional average person just because Bitcoin is that pristine collateral, where before, basically, right, you had Elon Musk, you had, Peter Thiel had been doing it with his, PayPal stock. Like, everybody hears all these stories of how these billionaires were able to make massive amounts of wealth by just borrowing against their assets. Now, how do you think that's going to change the game? Do you think that it's essentially going to make, I guess, assets just absolutely skyrocket when it comes to fiat? Or do you think it's going to just change and unlock just a select few? Because we are still seeing, we're in a bear market
Yeah,
still,
yeah.
right? So how do you see this?
Hard to tell at
Yeah.
times, but
Yeah.
other than the price.
Yeah. How do you see, I guess, this changing the landscape of assets and how not only is it borrowing against everything, but, how people are going to be behaving?
I mean, I do think people are looking for more diversification in the asset class. So we were talking sort of before we got on air about sort of 20 and 30-year-olds. First of all, that challenge is common globally. So it's not something that's just the United States. And so if you want to be proactive about your future, then you need to be thinking about what are the assets I can invest in to get a similar or better exposure to them what your parents might have gotten to in terms of buying a house. I think it's fantastic that people could start small. Right? You can basically start for $5,000, $10,000 worth of assets, accumulate Bitcoin, buy against it, do small investments. I think it's really important to build the financial literacy around understanding the tools, understanding how to manage risk. But then once you have the cash, you can start looking at a lot of different stuff. Do you want to be in real estate? Do you want to have sort of fixed income instruments that are giving you sort of a return or cash flow? Do you want to go after growth stocks and have something on the top of it? I think the big thing to be aware of is trying to understand how to manage your margin calls or what your LTV is on the loans so you don't create a stack that is unstable and where you're taking undue risk. I mean, I'm a believer of you've got to be in it for the long term and you got to learn. There's no shortcuts. Learn the ropes in terms of how the product works. There's a lot of, I think, attractive returns for those people that do. It can be challenging at first, but at the end of the day, there's a lot of just you got to understand the math in terms of how it plays out.
Yeah, and I think that at the end of the day, that's all it is, right? It's just like understanding the math where the numbers are moving. But the additional part of all of this is that I think traditionally people used to grow their wealth through homes. And that seems like it's been a real pain point for the younger generation. I think the average home buyer, we were talking about this, is now over 40 for a first-time home buyer. Now, how do you see Bitcoin, I guess, maybe bringing back the American dream? Do you think that that is going to be a way, maybe what CJ's building or what you guys are doing or Salt, is that going to be unlocking the generations to come here to at least own a home and get that American dream a little bit earlier?
First of all, when you look in history about how people have accumulated wealth, one, they own assets, and typically they own either real estate or an actual business, right? And they're able to borrow against both of those to go make other investments and create sort of income through the additional investments. I think Bitcoin has the opportunity, hopefully, to be a bridge to people to get to the larger assets that they can't get in straight away, and along the way, help them be more sophisticated and savvy in terms of how to use those tools. Because if you had to wait to grow a business to be a reasonable size, or you had to have a large enough property, that's a big hurdle to get over. But if you could start small and maybe get to a point where you could have 30, 40, 50% of your income be coming from sort of assets, all of a sudden your flexibility about now I can start my own business and bet on yourself. Now that's where you're really going to get the leverage in terms of amplification of wealth. Right? All the richest people are wealthy because they have equity in a business and they own assets. And so the question is, how will people be creative in terms of getting to those spots as we look forward?
Yeah, and so how do you think that this, I mean, not only that, but also from like the home building and that side of things, because there's always people saying that housing market in the United States right now is on a house of cards, right? I mean, we saw everything inflate away like crazy in COVID. We saw the age that drastically of the first-time home buyer like essentially go parabolic, as we did with home prices. So, how does Bitcoin and this asset, when you could get into it just for $1 at this point, or even just, DCA slowly in, how does this unlock the wealth even more going forward?
Well, I think it gives you a real inflation hedge, both in terms of Bitcoin, and then if you think about owning assets rather than holding fiat, it gives you a way. Like if we end up having low interest rates, if there's sort of additional capital supply to the market because the economy needs it, then the prices will go up on the assets, and you want to be on the side of owning some of those assets so that you get that appreciation along with it, and come up with your own formula for how you want to think about the diversity across Bitcoin, across real estate. We talked to a lot of customers. I'm an advocate of sort of having Bitcoin as part of your portfolio. The one thing I do know is 0 is the wrong number. And it's up for people to really sort of describe and think about what they want to be holding in terms of their level of comfort and their sort of diversity within their own portfolio.
Yeah, I mean, obviously, right? Zero, just get off 0, everybody. But at this point, too, it is an interesting time in the overall cycle, right? We're kind of in a bear market. So it doesn't really seem like it in this bear market just because there's so much building that's going on. But in the macro, how are you viewing everything just in general right now? We've got a lot of, just geopolitical turmoil. Markets seem to be swinging every single day. What do you think of the overall state of the market right now and how, things are building?
So from a macro perspective, I think, first of all, the fundamentals of Bitcoin have not changed. There's still ever only going to be 21 million. The network has been uncompromised in its history. You look at Iran wanting to be paid in Bitcoin, it shows you the censorship resistant nature. I think to a certain extent, whether, there's elements you agree or disagree with, the fact that a sovereign country would want to get paid in Bitcoin to avoid any risk of having that collateral seized is really telling, and I think a real validation of some of the foundational principles that are behind Bitcoin. Secondly, when we look at regulation is moving forward globally. We got the progress and hopefully the passing of the Clarity Act soon. There's more conversations. There's a Bitcoin positive or Bitcoin forward Fed chair about to sort of come in. There's a lot of good things that are happening there. Central and South America are rapidly advancing Bitcoin regulation and cryptocurrency regulation that is going to open up those markets. Same thing's happening in Europe. We got with MiCA, we're having some standardization, which is great from a global perspective. And Asia Pacific has similar developments, between Australia's rolled out some new regulation. So we've got nothing's changed in the foundation. We've got forward regulatory movement towards clarity. And then the institutional adoption continues. We're in a bear market and Morgan Stanley is announcing an ETF. So we've got an element of the investment banks and the institutional capital wanting to come in, making bets even during this market. So I think that is a great sign. And then when I look at acceptance and awareness, Square rolling out Bitcoin terminals to 800,000 merchants may not be a game changer in terms of the initial volumes, but it will be awareness. I spent sort of more than 20 years in the payments industry, and the name of the game of payment cards was to have a sticker in merchants' windows so people would know to ask about it. And I think what Square has done is going to be a major step forward, because if you see the Bitcoin at every cash register, you're going to start to say, hey, maybe I can use that, right? And so I think that is going to help enable the awareness and ultimately to the acceptance.
I think it's just a touch point thing as well. When you go into that cafe, you see the Bitcoin logo there. They say the average person, it takes 12 touch points before they actually start digging in and researching about a specific topic. So exactly like you said, I think it's just going to be huge for adoption. And it's so crazy that we're sitting here and talking about all this bullish news, but we're sitting around like $75,000 a coin right now. And it feels like we've been under 100,000 for an eternity at this point now. We are also seeing a lot of, I guess the rumor or the speculation was a lot of the whales were selling, right? And I think, obviously you guys have been around for a while, but there's a lot of other lending programs, companies and everything like this popping up left and right. So now that all this emergence of these products are coming on, do you think that the whales now are actually going to get exhausted as selling and we're going to see this price action go up?
And there's some data that I think starting to indicate this, is that we will move off of the whales being sort of the real, moving the scale more significantly. I can completely appreciate why a lot of whales would want to sell when we got up to the 120 plus mark. They've been in it since the beginning. They want to take out some cash for tax reasons or other reasons. It might have been easier just to do it and go do other things or have that money on the side to make other investments. But I think as the lending products improve and there's more options, then people will be able to make different decisions for how they want to leverage sort of their asset and tap into the value. Again, going back to what we talked about, the ultra wealthy. You buy appreciating assets, you don't sell, and you borrow against them to then really figure out how you want to manage your money. Not only do you keep the exposure to the underlying asset, but you avoid taxes. It's a very tax efficient way to be spending money, and you just accumulate it. It's the way the ultra wealthy and businesses do that all the time. And I do one other thing, I think then the new demand will be from the people that are being locked out of housing and locked out of other asset classes, and they are going to start to want to learn about Bitcoin, be able to figure out how, if I'm 25 and I don't want to feel like I'm falling behind, what do I do?
Yeah, 100%. And I mean, you brought up Iran too, and I want to get back to that because I think, not only is it another use case that we're seeing like really shine, there was rumors that Venezuela was secretly stacking Bitcoin, and there's rumors that they have, I think, like 660,000 Bitcoin just from selling oil because of all these sanctions. So I think Bitcoin's more in the news. We're seeing more people start to get those multiple touch points. So what's another bullish thing that you guys are looking forward to here in the next, we'll call it 6 to 12 months?
So I think the most bullish thing that we've seen in terms of talking to is the institutional capital that wants to come in. I really do think that as people are understanding the quality of Bitcoin as an asset, how people are building digital credit on top of it, they want to participate because they know it can be liquidated quickly. They know the appreciation of it. There's innovation around the products that are being designed. And I think that's going to attract more people in as they see more of that institutional capital in. For us, today we offer 1, 3, and 5-year loans. We want 10, 15, 20-year loans to allow Bitcoin to do its thing and to be able to share the benefits not only of the cash that we can put to work for that length of time, but also then the appreciation. I fully expect to see products in the market that, one, are going to extend the time period, two, find innovative ways of not only reducing the volatility, but then sharing the gain if you sign up and you make a commitment for a longer term.
What needs to happen for those products to be able to be available? Is it more, institutional adoption? Is it regulation? What are some of the things?
It's mainly the capital, right? I mean, the capital hasn't been there. And I give Ledden sort of due credit for, they've got the first sort of rated public securitized lending vehicle, and that's just made the awareness for everybody that's in that market. I've talked to a lot of banks, a lot of sort of investment houses. Asset-backed lending is a better option than private credit. It's a better option than a lot of other investments that they have because of how well, sort of competent lenders can sort of capture both the monthly interest payments, but also ensure that the principal is going to get repaid.
You've seen the private credit market start to blow up a little bit. Do you think that will also play a role into what you guys are building and how, people are going to say we need to get out of this private credit market and move into more of what we're talking about here?
I think it will shift. I think the money will move. One, they've got to learn about it. Two, somebody has to go first, and I think we're seeing that. And then three, their money will move because they just want to yield. As long as they know and have confidence they're not going to lose the underlying collateral, they want the yield. They want to put large sums of money to work. I'd love to see the market cap go up to sort of 10 trillion and be 10 times the size it is right now, because then I think a lot more capital could be put to work. All the building that's happening now is moving towards that and not worrying about the near-term price.
There we go. Yeah, I absolutely love that. Now, are you guys having anything exciting coming up through SALT? Everybody watching this should be on the lookout for. I mean, obviously, you guys got a great product with SALT Shield and everything like that.
So, we're super excited about the future. We've launched 2 new offers at the conference that people can take advantage of. One, we really are working hard to continue the downside protection. And one of the things that we do on the downside protection is the SALT Shield. And so we have a bundled offer where if you want a 50% LTV loan, you can get it with SALT Shield for 12 months at $10.95. Really wanting people to come try the product for themselves, understand how it works so they feel comfortable about it. And then the other offer that we've launched is we really want people to try SALT, and we're willing to beat anybody else's rate by 150 basis points. So, reach out to the SALT team. You can show us sort of a lending agreement or a statement, then we'll beat lenders' rates by 150 basis points.
There we go. I absolutely love it. Where can they find out more about you, Hunter, and the great things you guys got going?
So, saltlending.com, you can find out more about the products he offers. I can be found on X and on LinkedIn.
All right, awesome stuff. We'll link all that in the show notes. Thanks so much, guys, for tuning in. All right, thanks.
There you go. That was great.
Yeah, awesome.